Miscalculating your FERS pension and understanding the FERS Retirement Supplement. Let's break it down on this episode of the Hawaii Retirement Show. All right, welcome everyone. Thanks for tuning in to this episode of the Hawaii Retirement Show. Hope everybody's having a good fall season here and has their Halloween costumes all picked out. The weather is, I think, starting to turn here a little bit. Notice starting to get 1 or 2 degrees cooler in the evening. And I like this time of year. So I thought for today's episode, I would do one for the federal employees out there. I haven't done one in a while on some FERS info, and I thought it was timely given the federal shutdown. So for all those affected by the federal shutdown, hope you're doing well. I think it's a good opportunity to reevaluate maybe your emergency fund and cash reserves that you have on hand, because I know some federal workers are feeling the strain of no paycheck. And a lot of times, when things are going good, there might not be a need, or you can't foresee things like this coming up, and maybe you run a little lean on your cash reserves or emergency fund. But this is a good instance of where, we don't know what's coming down the road, and, it's a prime case for having a good emergency fund and cash reserve to float you for unforeseen loss in income or unforeseen expenses, right? But anyway, I hope everybody's doing well, all those federal workers affected. Today we're going to talk about miscalculating your FERS pension and then also understanding the FERS Retirement Supplement. So let's start with the FERS pension. I read somewhere that, FERS pension calculation errors can sometimes be reported as high as 20%, right? I think that figure is probably exaggerated, and you understand where that kind of comes from. But there are instances of people, miscalculating on their own, or, maybe OPM, and we'll get into it. Maybe they lose SF50, or there's, whatever it might be. We'll get into some of those things of why OPM might miscalculate your FERS pension. Okay, so quick refresher, FERS pension, right? The formula. Your high three average salary times your years of credible service times your pension multiplier, right? And we'll get into that. It's either 1% or it's 1.1%. You figure out that formula and you get your gross annual pension before taxes and deductions, right? Important to know that, gross annual pension. Okay, so let's look at some of the errors or missteps, miscalculation things that can happen, right? Starting with the first part of that formula, the high three, the average, right? Remember, this is your highest average basic pay earned during any 3 consecutive years of service. 3 consecutive, right? 36 months consecutive years of service. Most oftentimes this happens at the end of your career. Usually you're making the most money towards the end. But it's 3 consecutive years. Let's say you had one spike year of really high pay and then it dropped back down and you worked for another 20 years. You might think, well, my high 3 should include that 1 year I made a lot of money 15 years ago. But it's 3 consecutive years, right? So maybe 3 consecutive years later in your career was more than that 1 year of high pay with the other 2 years of regular pay, right? 3 consecutive years. So it's important to review and save all those SF50 forms, right? Anytime there's, pay changes or job changes, you get that SF50, it's good to keep record of those because they can get lost in the shuffle by OPM. It has happened. It does happen, right? Especially when you're moving around between agencies or whatever it might be. So definitely save all those and look them over. Give them a quick look at before you just throw it in the drawer, right? So the other thing with the high 3 that can be miscalculated or misconstrued is understanding basic pay. High 3 average uses basic pay, meaning it doesn't include overtime, bonuses, or awards, stuff like that, right? All it includes is your salary, your shift rates, right? For all those people working, second and third shifts, And then also your locality pay, right? Which is kind of built into your base salary. Not COLA, but your locality pay. Sometimes people look at their, W-2 and they say, well, this year I made, $150,000 this year. Yeah, but if some of that was attributed to overtime, you can't use that for your calculation when it comes to the high three, right? It's just that basic pay, which is salary, your shift rates are included, and locality pay. Okay, moving on to the second part of that equation, years of credible service. So there can be missteps with the years of service time due to like gaps in service, right? If you take time off and then you jump back into federal service or you transfer agencies, a lot of times that's where you're going to see some miscalculations by OPM. Maybe they don't have record or it doesn't transfer over, whatever it might be, right? Or maybe there's a missing credit for your sick leave. Maybe they left out your sick leave when it was calculated. Or military buyback. That's a big one, right? For those who've served National Guard or just active duty, right? And you buy back that military time to count towards your years of service, but it needs to be verified, and maybe that was left out of the equation, or maybe you're calculating yourself and you left it out, right? So it's important to understand, your years and service time is calculated as years, months, and days of credible service. Unused sick leave increases that credible service. I did an episode, it's been a while, but about how that's all calculated and tied into your FERS benefit there. Again, military buyback time, that's a big one for checking to make sure it's included. And again, transferring agencies is the big kind of life event that would cause a lot of these calculation errors. If you get into one branch of federal service, one department, and you stay there your whole career, odds are it's very unlikely you're going to have any issues with the years of service and your SF50s and the calculations, right? Because there's not a lot of moving parts there. Though you might have gotten some promotions throughout the years and you want to make sure that's all accounted for. But really, the transferring between agencies and the military buyback time, those are kind of two big ones to keep your eye out for. Okay, next part about the years of service that I want to get into is understanding the difference between service computation date, SCD, versus retirement service computation date, RSCD. They can differ. They could be the same thing, right? But your service computation date is used primarily for your leave accrual, right? It's when you started in federal service and other administrative benefits, I'm sure. And we all know annual leave, right? If you've 3 years of service, you get 4 hours of pay. After 3 years and up to 15 years, you get the 6 hours of leave. And then over 15 years, you get 8 hours, right? Which is pretty nice. 26 days a year, I think that comes out to. And so your service computation date is used for this leave calculation, amongst some other things. But it can be different than your retirement service computation date, RSCD. And your RSCD is used to determine your retirement eligibility and the annuity calculation, right? It's specifically for your retirement calculation, retirement service computation date. So it includes all the credible, retirement time you had, and it excludes time that doesn't count towards your retirement, such as unpaid military service, right? Temporary service. If you had some of that, if you had breaks in service over 3 days, right, that's excluded from your retirement service computation date. Excess leave without pay, your LWOP, right, is then subtracted. So your sick leave doesn't affect the retirement service computation date. That's just used for your annuity computation. But your retirement service computation date is different from your service computation date. And if you have questions, you can request from your HR, your personnel department, what's called a certified summary of federal service. And it can confirm your retirement service computation date. And it takes time. They might not be happy with the request because they kind of, collect all the data for, your retirement eligibility and your credible, retirement time. But you can request it from your HR. Maybe not a bad idea as you start to approach retirement. Okay, let's move on from that. Let's talk about the multiplier, the last part of that FERS formula. Big one here is applying the correct multiplier, right? Or misunderstanding early retirement penalties, right? The reductions. Okay, so your multiplier is either 1% or it's 1.1%, right? To qualify for the 1.1%, you gotta be 62 or older with 20 plus years of service. You get the 1.1. And if you think about it, it seems small, right? 1.1 as opposed to 1, no big deal. That's a 10% boost to your annuity, right? 10%, 0.1, 10% when you use that as a multiplier. So it is significant, and it's important to understand which multiplier are you applying to your retirement annuity calculation there. The other thing is, if you did have part-time work, which is part-time work in the federal government, from what I see, is pretty uncommon, but it is out there. And if you do have part-time work, the OPM applies a proration factor that kind of reduces the multiplier on the final calculation for that work. I'm not too keen on that, but there is, if you did have part-time work, it does affect your multiplier in some ways. Okay, so last part on this miscalculations of your FERS pension is I kind of touched on in the beginning, right? When you do your FERS calculation, what you come out with is your gross, not your net pension, right? And sometimes people confuse gross estimates with your take-home pay, right? The amount you're actually going to see in your bank account every month is different than the gross, right? The reason being, there's taxes, there's deductions, right? There's survivor benefits. It could be a 10% reduction for your spouse, so they continue your FERS benefit when you pass away, depending on which survivor benefit you choose. That can vary. Federal taxes, there's state taxes withheld. And then also, too, your medical, right? The federal employee health benefits, FEHB premiums, they're going to be deducted. And if you still have the FEGLI, the group life insurance, then that'll be deducted as well. So when you calculate this on your own, understand you're looking at the gross, not the net. And you got to look at all the deductions and taxes that are going to be taken out so you can see what that take-home pay is going to be. Now, there are things that are taken out while you're working that won't be taken out in retirement, right? Deductions. For instance, OASDI, Old Age Survivor and Disability Insurance, right? This is what you pay into. You pay 6.2%, right, every pay period into this. And this is for your Social Security, paying into Medicare and those benefits, right? Once you retire, you're no longer paying in to the OASDI, right? 6.2% is no longer being deducted from that pay. The other thing is, if you're contributing quite a bit to your TSP, once you retire, that right now that's coming out of your paycheck, right? So you can look at how much you're making, you see how much you're taking home. But in retirement, you're no longer going to be contributing to the TSP, right? It's not even an option. You couldn't if you wanted to. You're retired. You can't contribute. So, you can look at it as that's no longer getting deducted from your pay, right? So it's just understanding, your gross estimates from the calculation and then what actually is going to be taken home, right? Once you factor in your medical premiums, your taxes, survivor benefits, it can change the pension amount by like 25%, when you start looking at all these things from where you started at the gross to where you figure it out with all these deductions and taxes and whatnot. All right, so I think that wraps it up for the miscalculations of the FERS pension. Let's move over to understanding the Federal Retirement Supplement. Some of you may be familiar with this. A lot of people aren't. And so we'll kind of go through what that is, how it's calculated, and who qualifies. So the main thing to understand is the FERS Retirement Supplement, you got to think of it as a gap for Social Security, because FERS workers can retire and leave service before you're 62, before you're eligible for Social Security, right? And so you can get this FERS supplement, also called the Special Retirement Supplement, SRS, to fill that gap before you're 62. And it's kind of like a substitute for Social Security, okay? But keep in mind, it's not paid from Social Security, it's paid from OPM. But the concept behind it is it's a bridge the gap until you reach 62, which is Social Security age. Okay, so let's talk about who qualifies for it, right? You got to retire as an immediate retirement, right? You can't do a deferred retirement, and you can't retire early. You can't take like a reduced annuity because you're retiring early, right? It's got to be immediate, and you got to be at the minimum retirement age plus 30 years of service, or age 60 plus 20 years of service, right? So again, that minimum retirement age, it can be as low as, I think, 55, up to like 57. You can retire at let's say you retire at 57 and you have 30 years of service and you do an immediate retirement. I guess that means you started at, 27, right? So you started at 27, you did 30 years of service, you retire at 57. From when you retire until the month before your 62nd birthday, which is when you become eligible for Social Security, you qualify for this FERS Retirement Supplement. Okay? It doesn't count for minimum retirement age in 10 years or any deferred retirements or disability or anything like that. The only two pathways to this FERS Retirement Supplement is either age 60 with 20 years of service, and then, if you retire at age 60, you could have 2 years of this FERS supplement until you're 62. Or your minimum retirement age, you got to look at what that is, plus 30 years of service. Okay? More than likely, it's probably 57 plus 30 years. Okay, so that's who qualifies for this FERS Retirement Supplement. Let's move over and look at how it's calculated. Okay, so here's the general formula. Okay, it's your estimated Social Security benefit at 62, right? So we figure out what that estimated Social Security benefit is at 62. We're going to multiply it by your years of service divided by 40. Okay, and 40 is, that number is chosen for Social Security reasons because that number is used within Social Security, right? So years of service divided by 40. Okay, and then times your estimated Social Security benefit at 62. Okay, so let's do an example, right? So let's say your estimated Social Security at 62 is $1,600 a month. $1,600 a month is what your Social Security statement says you're going to get at age 62. Okay, and you did 30 years of federal service, FERS service, right? So the first thing you do is take that 30, that's your years of service, divide it by that 40. Okay, 40 is the key number to this calculation. 30 years of service divided by 40, we get 0.75. Okay, so you can think of that as that's your sort of your multiplier, right? So then we're going to take that estimated Social Security benefit at 62, $1,600, times that 0.75, and that's going to give us $1,200 per month, right? Until you reach age 62. That's the FERS supplement. That's how it's calculated. So it can be a big boost and kind of bridge that gap until Social Security. It's going to turn off when you reach Social Security age 62, but that doesn't also mean you're not obligated to then claim Social Security at 62. But because you have the option, you're eligible to claim at 62, the benefit shuts off. You can still defer claiming your Social Security benefit until your full retirement age, which is most likely 67, around there, or all the way until age 70, right? That's the latest you can delay claiming that Social Security benefit. You could delay past 70, but there's no point because you're not going to get any benefit. You're just losing out on money there if you delay past age 70. Okay, so that's how it's calculated. There is something called the earnings test, okay? And this can reduce the FERS Retirement Supplement. And it kind of works. Social Security has an earnings test as well, right? And it works similarly. So there's a limit every year, right? And sometimes it gets adjusted up for inflation. So for instance, for 2025, the earnings test is $23,750 $23,400. So if you earn more than the threshold, $23,400, while you're collecting the FERS Retirement Supplement, OPM is going to reduce the supplement $1 for every $2 earned above the limit. Okay, so again, if you're over that threshold, 2025, it's $23,400. If you're earning income while you're collecting this FERS Retirement Supplement, OPM will reduce the supplement. Okay, not your pension, but the supplement, $1 for every $2 earned above that limit. Okay, and this applies to earned income, right? So it doesn't apply to investment income like your pension, your TSP, anything like that. But let's say you retire at minimum retirement age 57, you take a year off, a buddy asks you to come help him out and work with him. You kind of, you're tired of sitting around, you're up for going back to work, you feel pretty good. And you start making money, and you might not know it, but if you pass that threshold, you're going to start to see that FERS Retirement Supplement reduced. Now, not the end of the world. I mean, you're still making out pretty well. You're still collecting some of the FERS Retirement Supplement, and you're working, and you're collecting your pension at that point. So it's not like this should be avoided at all costs. It just can catch people by surprise if they're not aware of this earnings test, right? Not a huge deal, but it can catch people by surprise. Okay, and again, I just want to reiterate, it ends at the month before you turn 62, okay? So let's just close it out there. We covered the miscalculations, potential miscalculations on the FERS retirement, the pension there, and we talked about the FERS Retirement Supplement. I would just say, keep and save all those SF50s. Know the difference between your service computation date and the retirement service computation date. And you can always request to HR a certified summary of federal service. They might be a little reluctant. It takes them some legwork, but you can do that. And then, just looking at gross versus net, that's a big one. Especially when you're looking at planning ahead. When I, outside the podcast, I do retirement planning as a financial advisor, very separate from this. But when I do work with federal workers, a lot of times I see them doing this retirement planning and trying to map out their expenses and income using gross numbers with their FERS pension, right? So it's important to understand all the deductions and taxes and all the things that are deducted now that won't be deducted later, right? When you're really dialing in and trying to do some of this, retirement planning to look at your cash flows in retirement. You only retire once, and once you make that decision to retire, right? I don't want to say it's irrevocable, but you've made that decision to retire and start collecting your pension. You can't really go back, 2 years later and said I should have done this. So it's important to just take your time and review every component of it, think it through, and it'll just allow you to more accurately plan what that retirement is going to look like. So I think that wraps it up. Again, hopeful that all of our federal workers are doing well. I'm not a fortune teller, but I do think shutdown can't continue too much longer. I could be wrong, but hopefully it's over with and everybody moves on. All right, if there's anything you'd like me to talk about on the show going forward, email it over to aloha@hawaiiretirementshow.com, and I'll catch everyone on the next one.
The opinions and statements presented on this show are for general information only and are not intended to provide specific advice or recommendations. Never make any investment or financial decisions based on information offered on this show without first consulting your financial, legal, or tax advisor. All economic and performance information mentioned on the show is historical in nature and is not indicative of any future results. All indices mentioned on this show are unmanaged and cannot be invested in directly. All information is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. Lastly, all opinions expressed by Jason Katita and any guests on the show are solely their own opinions and do not reflect the opinions of or are endorsed by Toba Financial. For Jason Katita, investment advisory services are offered through Toba Financial LLC, a registered investment advisor offering advisory services in the state of Hawaii and in other jurisdictions where exempt from registration.